Yo, what's up, everyone? So, I think by now you already know what I think about technical analysis. If you watch this other video, I don't know if it is here or here, but if you watch that video, you know that I told you that technical analysis is like doing astrology or tarot, but for grown up men. But today I'm going to show you what kind of technical analysis do I personally do, okay? And I don't do much, but although I think technical analysis is useless 95% of the times, it can indeed sometimes help you to confirm your bias. No, just kidding. Can sometimes help you to confirm if you are reaching a bottom or a top in a market. And look, by the way, I'm not trying to say that you can spot the bottom of a market. That's literally impossible. Not even like the most brilliant investor ever can do. That's why people should do dollar cost averaging, never go all in, because maybe Bitcoin now is $20,000. It's quite bottom, is more bottom than it was at 40 or $50,000, obviously. But it can go to 15, can go to 10. In fact, Bitcoin a few days ago was like 21 and went to 18. So you can never really understand the bottom. That's why if I have a lump sum money, I will divide it and I will do dollar cost averaging. If I have $1,000 to invest during 1 month, I will do 250 per week, something like that, so that this way you will always find the bottom. However, the strategies that I'm going to show you in this video, the technical analysis indicators, I'm going to show you maybe around 6 different indicators that are going to help you to understand if you are reaching kind of that bottom relative to the rest of the price. Technical analysis is the analyzing patterns in the chart according to the previous prices, right? According to the history. And you cannot predict the future looking at history only. You need to understand what's going to be the future. What are the fundamentals? Why are people adopting these chains? Who are the people behind it? And the macroeconomics. And there are so many other factors that maybe I will cover in another video. All right, but I will now show you these 6 indicators that will help you to understand if you are reaching a bottomish market or not. And again, full disclosure, you may be reaching the bottom, but if the Federal Reserve, Papa Powell, comes tomorrow and increases interest rates 1 or 2%, the bottom will be even bottom or bottomish, bottoming. Yeah. So let's get into it. Yo, I like to use TradingView. You can use any other charting tool that you like. And I'm going to move myself here. All right. Let me put it a little bit smaller. Okay, so let's look at these charts. Here, I'll give you the example of the Bitcoin US dollar. And you have a number of indicators that can help you to understand if you are in a bear market or not. And consequently, it will help you to understand if the prices that you are targeting to buy are closer to a bottom or are at least cheaper compared to what they used to be. All right, so let's go and take a look at these. I already favorited here some indicators, but let me actually start with an indicator that is not here on the list. RSI, Relative Strength Index. What RSI is going to tell you, basically the way to interpret this is that whenever this indicator is below 30, it seems that the market is oversold, and above 70 is overbought. So basically, okay, if you look here at this top here, so the market, the RSI was signaling that when Bitcoin reached 65,000, it was overbought. So this price was probably a good price to exit Bitcoin, to sell, to take some profits. And then we come all the way down. Here, around here, for example, there was a big drop, and Bitcoin dropped like from 30,000 to 20,000. And RSI was telling us that it's oversold. So probably it was a good moment to buy here around 20,000. And at the moment we are at 19,000. So according to RSI, compared to the history, this will be a good moment to buy. Of course, history doesn't mean that the economy is going to recover straight away. I was watching this asshole on YouTube, like this guy is saying, "Oh, because now Nasdaq is adopting crypto, prepare yourself, buy now, you can get rich." Like, come on, it's totally nonsense. Because like the macroeconomics are not aligned yet for the market to have a full recovery. We need to control inflation. We need to control the COVID policies. We need to like to have the war going on. So for the markets to turn into a bull market and for you to get rich, the macroeconomics need to help. But what these indicators can tell us is that, yeah, this is kind of a good moment to start buying crypto. Okay, so we already saw this RSI. What else we have here? 2-year moving average multiplier. This one is an interesting one. So basically what this is going to show you is that you have this 2-year moving average, and whenever crypto price is below this line, it's a good time to buy, or a better time to buy, okay? So you see here that, for example, when last time that Bitcoin was under the 2-year moving average was in March 2020, when Bitcoin was at $5,000. So this is not wrong, right? If you bought Bitcoin at $5,000, not bad at all. And you now it's telling you again, like it's strongly below the 2-year moving average, and it's telling you to buy again. I actually have here, I think, a better 2-year moving average. What is this? This one. Okay, this one even tells you here. So if Bitcoin passes the 2-year moving average 5x multiplier, which is this red line, is a sell sign. So you should have sold around here. Maybe you should have sold around here. And now it's the time to buy. It's a confirmation that you should buy. And according to the signal also, it's a bull market, confirmed bull market, once the Bitcoin price goes above again the 2-year moving average. Okay, so this one is another indicator that is telling us that maybe we should do dollar cost averaging and buy a little Bitcoin around these prices. What else do we have here? Let me show you one very basic moving average across 50 and 200. And let me switch to 1 day here. So this is basically showing us that this is a... Oh, by the way, I have another video here or there you need to check, explaining what are moving averages and why do they matter. So here you have the moving average 50 in red and moving average 200 in green. This is basically the average price of the last 200 days and the average price of the last 50 days. And whenever the moving average 50 goes below the moving average 200, it means that we are in a bear market. And you should start buying once the moving average 50 goes below the 200. So this is a moment to buy. And if we go here, like let's go back in time, this will have to tell you also to buy, for example, around these $8,000 and stop doing the dollar cost averaging maybe around May 2020, and we'll ride all these long bull markets if we have done this. And now again, it's telling us that if you believe that this is a good strategy to do dollar cost averaging, it's telling us that we should do dollar cost averaging. Actually, I indeed started to dollar cost averaging when Bitcoin was around 40,000. Not ideal considering that it's now 19,000, but the thing is that I have a good portfolio management and cash management, and I divide my cash so that I have enough cash to always be buying a little bit. In fact, I buy Bitcoin every single day. Let's look at more indicators. I also really like the spend output profit ratio. This is basically telling us whenever it's green, it means that people that are selling the output, the spend output profit ratio is positive, meaning that whenever it's green here, people that are selling Bitcoin are selling it at a profit. Whenever it's red, people are selling Bitcoin at a loss. And you see here that people have been selling Bitcoin at a loss since like April, consistently. What it is tells me is that like people cannot sell Bitcoin at a loss forever. There will be a moment where people will throw the towel and say, okay, I'm not going to sell any more Bitcoin. Or it will reach a point where the retail investors and the traders will say, okay, bye-bye market, I'm not up to this anymore. But you will have the diamond hand people, you will have the long-term investors in this case that will keep buying and it will not be selling, and this will turn green again. And once it turns green again for a few consecutive days, it's a good sign. What else? Let me remove first this one here. What else do we have here? I really like this DCA cheat sheet. This is really cool. It combines a few moving averages and also RSI to tell you when it's a good time to do aggressive dollar cost averaging. So the more less bright green is to tell you to start doing dollar cost averaging, and the really bright green is that you should be doing aggressive dollar cost averaging, which is what I've been doing. And if we go back in time, last time this told us to do the aggressive dollar cost averaging was when Bitcoin was around $5,000. So again, if you bought Bitcoin at $5,000, not too bad. Before that, it told us also to do aggressive dollar cost averaging around $3,500. So yeah, it will be great. And this also works with other cryptocurrencies, obviously. I can switch here to ETH, and let's select this one here. And it's again, now because of the recent Ether decline post-merge, is also telling us again that you should be doing dollar cost averaging actually since May. But now we have here the bright green saying that we should do dollar cost averaging, aggressive dollar cost averaging on Ether. Let me exchange again to BTC just for the sake of consistency. Bitcoin. Where is my Bitcoin? Here. Okay. And the other indicator I want to show you is also a DCA dollar cost averaging sheet. And is this one, DCA price realized long regression curves. So what this one does is to apply some regression curves to the Bitcoin price. So at the this green bottom here is the linear regression of the bottom prices of the Bitcoin chart, and in red is a linear regression of the high prices. And again, what this is telling us here again is that we are in a very bearish market, and maybe this is a good time to buy. Maybe, I'm not sure, not financial advice, but maybe, because if you look at history, this will tell you also again that around these $5,000, $6,000, this will be a good moment to buy. And if you actually bought Bitcoin at $5,000, you'll be very happy when Bitcoin went up to $60,000. It would also tell you that around $3,000, $3,500 was a good time to buy. It would also tell you, no, it doesn't go older than this. And it will tell you that when you are here in the red area, maybe it's a good time to take some profit. So yeah, I guess this is all that I have to show you. Yeah, these are all the indicators. And as you see here, if you combine these indicators, and by the way, if you need, I can put some of them in the description below. But if you combine these indicators, they will all tell you the same. They will all tell you that we are in a bear market. They will all tell you that this is maybe time to dollar cost average. And by the way, you can apply this to other assets. If you are into stocks, into other assets, you can also apply it to it. But this is basically telling us what we kind of already know, but it's good to confirm your bias, right? And to give you a bit more assurance. And it allows me to know that, yeah, maybe I should actually be doing dollar cost averaging. And it's not just me that I'm nuts. The charts are also telling the same, which is like when you go to these tarot readers, or like they read your hand, and you kind of get more comfortable with that. So this technical analysis is kind of similar. All right, guys, if you enjoyed the video, give it a like and subscribe. It will really help with the YouTube algorithm. And as always, I will see you tomorrow.